Thank you for joining me on this video. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Simple Market Signals helps you understand the level of risk in the stock market through our proprietary market risk signals that are emailed to you every weekend as part of our weekly stock market-based newsletter, all for less than $20 per month. Today we will be doing technical analysis on the S&P 500 for Thursday, April 16th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. What we're looking at here is a year-to-date chart of the S&P 500. Each candlestick represents 1 day of trading. Today we finished up 0.58% on the S&P 500 and closed just under 2,800 at 2799.55. Now on this chart, what we're looking at here is Fibonacci retracements of this entire move from February 19th through where we've bottomed so far on March 23rd. And what we can see is at this level, we've retraced almost exactly 50% of this entire move, okay? But I want to stress that we've only retraced 50% of this move. So we've had the trend and we've had a counter trend move. To me, the trend is still down. We're only up half of what we lost from February 19th. Yes, it's nice that we've come back halfway, but we're only halfway back to where we were just a couple of months ago. The other thing on this chart is this trend line, which I had in there last night. I just wanted to leave that in there so we can see that this trend on this counter trend move is still intact. However, we're getting closer and closer to breaking that trend to the downside. So if this market is going to stay in this upward counter trend movement, and if this is truly going to be a recovery, we're definitely going to want to stay above this uptrend line. The other thing I've been looking at is other parts of the market, and what I have learned over the decades of doing this is that it's really hard to have a true bullish environment, a really upward moving stock market without small cap participation. So what we're looking at here is a 6-month chart of the Russell 2000. We're going to use the IWM ETF to track the Russell 2000. I've done the same thing here. I put the Fibonacci retracements on the Russell 2000 movement. One thing I want to point out, though, is that the Russell 2000 peaked an entire month before, actually a little over a month, as you can see here. It peaked back in January before the S&P 500 peaked on February 19th. And what we can see here is that the Russell 2000 retraced exactly 38.2% of its move, but yet it's been falling over the last few days, and today the Russell 2000 was down 0.72%, while the S&P 500 was up 0.58%. So again, we've got a negative divergence going on here where we've got small caps falling over the last couple of days, while the S&P 500 is kind of drawing a line and going sideways, okay? And again, the small caps have only regained 38.2% of their move. The small caps peaked a month ahead of the S&P 500, which that was showing weakness right there before the S&P 500 even peaked back here on February 19th. And again, you know, we've only retraced 38.2% of the entire move, and we're starting to roll over on the small caps. So if this market is going to continue to advance, we will want to see small cap participation for this to really be a sustainable rally. If you would like to learn more about how my personal risk management system that I call Simple Market Signals can help you in both up and down markets, here is some additional information. Please note that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, this is just due to international compliance regulations. The Simple Market Signals product is a weekly newsletter that contains our proprietary market signals. The newsletter is emailed to our subscribers each weekend. Our goal is to have the newsletter to our subscribers by no later than 2 p.m. Eastern Standard Time each Saturday. You will also, as a subscriber, receive special midweek updates when warranted. So that is whenever there's a major signal or direction change, and that will make more sense after you go through at least one or two of the videos that we're going to introduce here in just a second. And guys, keep in mind that simple market signals, this is not for day traders. So if somebody has a really short-term time horizon, simple market signals probably is not going to be for you. Simple market signals is for investors and traders with at least a 6 to 8 week plus focus. So as long as an investor or trader has a time horizon of at least 6 to 8 plus weeks that they're focusing on, then simple market signals is going to work extremely well for them. A subscription to Simple Market Signals is just $19.95 per month. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. So we give you the first 2 weeks so you can take a look at the newsletter, see what we do. If you don't like it, you have plenty of time to cancel without being assessed any fees at all. So we have made this as risk-free for you as possible. If you would like to learn more about simple market signals, I have the following videos on my YouTube channel. I will also leave a link to these videos in the description box below this video. First off is the longest video. It's about an hour long, and it's the Successful Investor webinar. It's the entire story of simple market signals, including my background and why I feel that most people are going to need simple market signals going forward. There's a tremendous amount of market education in this webinar. So I would encourage all of you to go out and watch this because it is extremely educational, and if nothing else, it'll be very thought-provoking when you watch this webinar. So I would encourage you to do that. Again, that video is out on my YouTube channel. I will also leave a link to this video and all of the videos I'm going to introduce here over the next couple of minutes in the description box below this video. Now, if you want something a little shorter, about half an hour long, introducing simple market signals, it has a lot of the same information as the webinar, if you will, but I cut it down to make it fit into a smaller time frame. So it still gives you a ton of information. It's just not as inclusive. So if you're not interested in investing the whole hour, which I would encourage you to do so, but if you want something a little shorter but still very informative, introducing simple market signals would be the video you would want to watch there. And if you want the cliff notes, right, you want something that's less than 10 minutes long and gives you more information about the signals and the newsletter, which of course is how I deliver the signals. My proprietary signals within the Simple Market Signals model are delivered in the weekly newsletter. The newsletter has a ton of really valuable information in it every weekend over and above the proprietary market signals. But if you just want to kind of focus on the signals and the newsletter and what's in the newsletter, you'll want to watch the Signals and Newsletter Quick View, as I call it. And then if you want more information about the process, about what it looks like, when you subscribe, when you go out to the Simple Market Signals website, what does that look like? And it walks you through the subscription process and then what you can expect from there. This video will help you with that. And if you want some testing and you want to see some charts, right, in a video format of how simple market signals would have worked in the 2000 through 03 bear market, keep in mind I worked on the model for over 20 years and it finally came together for me in 2017. So this is back testing, but it's very accurate because I was able to just go back, look at the charts, and figure out with the model where the signals would have kicked in and where the signals would have changed. So if you want to see the back testing I did on the bear market from 2000 through 03 and how simple market signals would have helped you, the video here, S&P 500 2000 through 03 using simple market signals, is the video you will want to watch. And then I did the same thing for the 2007 through 09 bear market. So again, there's a video on that. I started using the model in 2017, and of course 2018 was a pretty tough year in the markets. The markets were negative that year, and if you'd like to see how simple market signals could have helped you in 2018, I've made a video on that as well. Again, all of these videos are out on my YouTube channel as well as linked in the description box below this video. And if you'd like to know more about my background, I have a video titled My Financial Services Background. It's about 3 minutes long, so pretty quick video, but it will give you my backstory. And I would encourage all of you to watch that video as well. And of course, if you'd like to go out to the website can be found at https://simplemarketsignals.com. And that is the website you will need to go out and subscribe to Simple Market Signals and receive our weekly newsletter, which will include, of course, our proprietary market signals.